Good morning, good morning, good morning. Welcome back, everyone. It is Sunday, and we are looking at Bitcoin on a daily time frame. Now, yes, we had this crazy jump on Friday. We had a little bit of relief rally yesterday, and we are getting up there today too. What I would say is keep your eye out for this area right here, which is around 22,800 for Bitcoin. It can definitely come over here and then reject on a daily close. And any closes under that yellow 21 EMA is only looking, I'm just looking for downside at this point. So there's no reason why I'm trying to buy the dip and get too excited. I'm looking for it to basically test back into here and then look for lower into the money lines. Okay, and then one thing I want to point out is right now Bitcoin's at 21,489. CME closed at 21,230. So we're basically hovering around where CME closed. Now, Ethereum on the other hand is 1626 and it closed at like 1700. So this is why I'm saying be careful for this. Today during CME open, you can see price action flow up and then come back down after CME open. So do not get too gung-ho of like shorting or buying the dip or whatever mentality you're at right now. Just understand that Ethereum has a little bit of a gap that if it goes to fill from 1620 to the 1699 level, you're going to have Bitcoin probably pump. And I don't want you guys to get hurt with your shorts. So just keep in mind, like the ideal short is around here, okay, for the daily time frame. Now let's go look at the 4-hour, and I can show you some other stuff. So as you can see now on the 4-hour, we're already coming into our 21 EMA. And as we open and close 4 hours going sideways, these lines will come down and they will become harder and harder resistance to break to the upside. I do think that if we can open and close 4-hour above 21,900, we're probably going to go test into 22,650-ish. Like that's very, 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 very possible for us to show that yes, the weekly now is on a downtrend to reject from this level right here. Okay, so the next week that when we open and close the new weekly open, as long as we're closing under here, the candle will be red. And the new weekly open, if it's going down, the weekly candles will be in succession red, basically. Trying to show you that a little bit of a pullback has started. Okay, we're at resistance, consolidation, people taking profits, whatever you want to call it, that's the situation. So the first warning sign of further downside is hourly open and closes under 21,000. As soon as you lose 21,000, 2150 even, you're gonna be pushing the low, and then more than likely all these dip buyers are gonna get pushed out of the market with the move into the liquidity. Because everyone who bought the dip here, that's great, but they did not even tap the liquidity and it's got front run. So now I'm kind of suspicious that why don't we just tap into this and then go up? So that's one thing I'm saying, like you might get resistance at the 21 EMA, which is at 21.9. And if we do get open and closes above it, then it'll probably shoot up to around 22,800-ish, 22.6 to 22.8, because between the purple and this green, and then get the next rejection to go down. It's only when we have open and closes above the 21 EMA that we will actually have the opportunity to go further. Until the 21 EMA gets open and close above, it's a shorting opportunity. So this is what I'm looking at on a 4-hour. This is my lines. As you know, on a descending channel, this is supposed to be green. I like to buy my longs off the bottom of the channel, right there. Okay, on the red, I like to take shorts off of the top of my channels. This one, everyone was able to see that this was being distribution, but people didn't expect that quick of a move. A lot of people got caught off guard. And as I was saying, like if price gets rejected at this EMA and we quickly close under the 21 and 55, it's going to trap these longs. And then the market maker just started distributing hardcore. Basically all these people, as well as anyone who was trying to find follow this trend line of this red channel, all got pushed out of the market. And the people who were smart and waited on the bottom of the channel for their long, they're the ones who got rewarded. Because now you can take a low leverage long, take 50% of your profit out at the middle of the channel, because you should be expecting a resistance right here at the middle, which is the breakdown. It's only when we close open and close above it that we can look for the next resistance, which is going to be taking out this high. The next resistance was going to be right where the top of this channel is and where this white EMA is, which is around $26,000. It's going to just stop out all the people who are shorting right now, because people are panicking and coming into the market, looking at the portfolios like, oh snap, let me just get out before the market dumps. And what can happen is they'll start rising quickly into CME open, because we have that gap to fill, and then when it opens, people are FOMOing in, causing the rise even to quicker, and then as people are all getting stopped out of their shorts and getting liquidated, when all the volatility comes to a calm pause at resistance, that's when the rollover will occur. Because see, we got a money line right here at 23.5, this pink naked point of control on a 4-hour. So that's where our top resistance is going to be. Our bottom support is right here on these two pink money lines. That's why I'm expecting this to kind of just catch everyone off guard, come over here, kind of do something like this, then like accumulate and come back up quickly. Something like that is what I'm expecting. But if it goes up right away and then finds support on the 21, we're not going to get this drop. Once the 21 gets claimed, it's going to be used as support. It'll bounce around between the 21 and 55, and then it'll just shoot to the top side to basically close out all the shorts. Because people will be adding positions in this level, and the people who are long are either taking profit or people who are trying to get into a short. The market maker is going to take advantage of all these people, because whoever's on the wrong side of the trade here is basically going to get hurt in the consolidation before the breakout move anyway. So that's what we're looking for on Bitcoin. Let's go to a daily on Ethereum. And I am going to take those doodles out, because if you want to see the drawings, you're going to have to go to the video. I'm going to be doing charting on much shorter time frames, and these crazy lines will get in the way of me trying to scalp this right here. So right now, if you're scalping in this range, let's zoom in to a 15-minute. So right now, you can see the green channel we drew on the 4-hour, we're above the midline. Okay, this blue dash line is the midline, so this is good. We're above the 21 EMA, so this is good. We're looking for a support bounce on the 200. This is all good. The scalp, as long as you are not closing 15-minute candles under 21,300, you have no reason to stop out of your long. Your long is fine as long as you can afford a stop loss at like 21.3. After 21.3, it's dangerous. Okay, 21.2 for sure. After 21,200, I would be kind of very cautious to take my long. I mean, stop out my long if I'm already long. If I'm waiting for a long, this is an ideal place to take a long. Right at 21 to 21.2, around this area. If we come back into this area, it would be a great long opportunity with a stop loss right under like this like previous support. And then if you want to be even like more sure, like a stop loss $1 to $5 like under this previous day low. If we take the low out, there's no reason for us not to go and tap the bottom of the channel. That's what I'm saying. This 19.5, I don't understand why we would not go there. We would at least come to this naked point of control at 20,200. So right now it's okay to be bullish, and you should have a stop loss literally at like 21.2, and then you can re-get back in on this touch over here if it comes to this or whatever. But to hold on the long and it's already coming down this low, it's so dangerous in this kind of moves, because it can just like leg down one whole nother leg, which I'm looking for all the way to 19.5. Are you going to be able to hold your price past this red line all the way to 19.5? Is your liquidation level that big? Like, if you can afford it, then cool. But if you can't, you better have a stop, man. I'm warning you right now. This market is not your friend. I do expect it to come back up and then roll on down because of the gap that Ethereum is showing right now. So, all right, let's get out of the scalp time frame and go to the real swing traders. Here we're going to Ethereum on a daily. Maybe Ethereum will give us a clue as to what to expect for the market. Remove my doodles. And this is what we're looking at on Ethereum on a daily. We're clearly at resistance, and we are under the 55 EMA. So for me, and the 55 EMA is under the 200. So we are in a bearish stance. I have no reason to think this is bullish. This looks like a head and shoulder distribution. I think we get a dead cat bounce probably into 1730 to 1750 and then roll right back down. Unless we get up to that level and then get above the 21 EMA and hold it as support, even if I can open and close 4-hour candles above the 200 EMA, the purple EMA, which is around 1700, I will be more confident of upside, but my stop loss is going to be right underneath it because I don't want to have the support bottom just break out and then we completely do another leg down, like a 1-to-1 leg, like just like this candle here. Pretend you get to see one more of them right here, all the way down here, to come to here and then go sideways and up. And you afford your stop loss to 1300. If not, you better understand to get the heck out of the market at a certain level. If I'm long right now, I have no reason to not get stopped out under 1570. Okay, that's enough wiggle room for me. Under 1570, if I'm still holding long, I'm foolish in my book. If I'm short, I don't want to hold my short. My stop loss for my short would be 1760. I don't want to hold my short longer than that because what could happen is this looks like a head and shoulder, but they can fake us out. And then what can happen is all the people who are trying to short, like I'm advising, if they don't get into this area and reject it, it can just continually go up to the other channel. This is where I was looking for my rejection that got front run. So we can come all the way there or higher just to really, really, really put the pain on the shorters. So we don't know what the market is going to do on Monday. This is all hypothetical scenarios. But if the market CME opens and we don't have strength, like dip buyers coming in and buying the dip like immediately, then you guys should be more hesitant to the upside and be more prepping yourself for the risk to the downside. Because that means they already are in a profitable position and they have no reason to buy the dip because they know that's going to go lower. You get that? If anyone here trades Elliott waves, like I don't know what wave this is, but in my book, we've already broken out of the ascending channel, bearish. Oh, see, that's a matter of bias though, because I drew my range very tight. But see if you can send this to the actual low, it still fits in the range. Shame. I probably had that on a different chart. So basically, the short was on the top, and I did not catch that. It poked outside of our channel a little bit, but it did get rejected off our major EMA. And then now we're trapped. All the longs are trapped. Now people are trying to buy the dip, but I think we might get another leg down. I think Ethereum has the risk of going to much lower levels. And here is a quick prediction. If we break out of this in a bearish stance, we're gonna get a 1-to-1 out of this channel. All the way to this level right here, around 1200, basically $1,200, right to the actual breakout consolidation. Because this move is allowing too many people to get in. It's not happening fast enough. So now I'm just assuming this is a dead cat bounce into resistance, and we're gonna roll over on a daily. Let me go to a 4-hour. Take away the doodles. So on the 4-hour, we are under all our EMAs. We're under the 55, 21. 21 is crossing the 200, initiating bear. This is bearish. This is now officially resistance. So until the 21 can get back above the 200 EMA, you are going to be looking at downside. And the one thing is, if we can just get a little bit of a pump above the 21 EMA now, because see, now this is lower, right? So it's easier for us to get above it with an open and close and then continue further. So if we can just go sideways, this 21 EMA will come down. Yeah, everyone's going to be like, okay, it's time to short. But one quick move above it, open and close, and then it'll just be continuation to the upside. A good way to know when something like that's going to happen is volume divergence. Okay, when the buys slow down, okay, these volumes are getting lower and lower, or we're getting up to tip. That usually initiates a bear move. if this is not a bear flag on a 4 hour, if this is not a bear flag and the volume is not going down to a crescendo or whatever, what will happen is the next volume candle better be one of those big green dildos, just straight up into the resistance. That's the only way you can prevent this 21 EMA crossing this 200. Is the market makers have to pump the price up, close above the 21 EMA, and let the next candle open and continue in the channel. This descending green channel is what it's trying to get back into. And then you're going to test the midline, and then the midline is the midline also of this ascending bear flag. So you understand the resistance in this level here is so strong that any price action move all the way up to here is okay, and then a rejection is expected. So all the people who are shorting early are going to get in trouble if they're not hedged with the long as well. So you can take a long, you could take a short, have your stop set, the ranges that I said. One will break out and lose your trade. The other one more than likely will be successful. And then if you don't keep your stops that tight, more than likely you'll be able to ladder out. Even if you're in the wrong trade, you'll be able to take your profit on the other side, and then when you are taking your profit on your profitable trade, you can add more leverage to the opposite side, dollar cost average into that short, and then you can either realize, hey, I'm gonna take a less of a loss because I just dollar cost averaged in on like a volume up. I had to take a loss anyway, but while I was pumping, I increased my leverage, I added to my short, increased my dollar cost average. Then on the retracement, I took my profit off and I did it again and again and again. If you trade properly, yes, you're going to be able to lower your average enough to a point where it's going to be a more profitable position. But the only way you can follow this strategy is by not having an over leveraged position in the red in the first place. So when you do your dollar cost average strategy, use specific levels, important levels, fib levels, or points of control, or liquidity levels, or like, you know, you got to have your confluence of like, say, your channels top or the channel bottom, EMAs. There's so many different ways to go about it. Oh, I even have this EMA here as resistance. So this EMA at 1790 at the previous month's high is going to be the resistance point. Even if we get 21 EMA gets up above the white EMA over here, like 1760 or whatever, there's gonna probably be people that are trying to ladder into their short, like right over here. And this line is gonna come right to the top of the green channel in time. And that's if we even break into our channel. This green channel is now resistance. We're testing back into it and we're already showing weakness. If this rolls down, makes sense. So markets are about to open. Expect by the time you see this video, a little bit more upward action after 9:30, 10. Which is about an hour from right now. You probably will see the roll down effect. If you don't see the rollover and we're just going sideways, then be warned that we might pump into the CME, so there's no gap. And then once that happens, if we go and touch into that area around 3, 4 o'clock, and we start rolling down, the CME is basically fill their gap pre-market kind of style, and then it's like you get one chance. Okay, you get one chance. When we get into that area of where we felt on Friday and we start rejecting off of it and we don't claim it, just assume CME is going to dump. That's how I would see it. The weakness is there. There's no reason why they won't continue the weakness. And then, wow, what I'm going to do now here real quickly, which we have not done in a very long time, is go look at the CME chart. Here is CME on the 4 hour, and ironically right above a naked point of control. That is interesting. That is a good bounce point. Here's a daily. Daily already once lost the 21, lost this, and it got claimed back. Now price action is under it. The second fail is the worst fail. So it doesn't even matter. When we open and close CME, this 21 EMA is going to come to this 200. I'm more and more looking now like we're going to tap some of this liquidity. Unfortunately, even your 55 is trying to curl down. 21 EMA is curling down, just pointing straight down. Once it loses this 200, this is going to be very bearish. Ethereum, quick. Ethereum is just starting to move. 2021. So CME wise, Bitcoin is the weaker asset. Ethereum is the stronger asset, obviously. But we are just about to break down for Ethereum, whereas Bitcoin is already shot the bed. See? Bitcoin already is going into the previous breakout area, and Ethereum is doing its best to hold support. So keep your eye on these assets at open. If this candle opens and starts going down, we've officially probably made like a local resistance at this level. So if people want to take a long or a short, it's legit because anything can happen. So you can have both trades with the stop loss because the move down can happen so fast and then it can just pump right back up. But the way I would trade this, usually when this kind of things happens, the next candle is a flush down. Okay, like how Bitcoin did it. So now we're expecting Ethereum to flush down if it's gonna tap into like 1500, 1600 area. I mean, low 15 to 1550, and then see if that is enough for the liquidity grab. If you find weakness there and it goes straight into the previous breakout, see this gap right here, this little gap open that occurred. If it comes to fill that area, that will be tremendous opportunity for a long scalp. This previous little square over here, okay? Just imagine this little square. Oh, look at this. AJ already had his fibs. Ha ha ha. I've been prepared. So there you go, guys. I guess I did the TA on this a while ago, and it's literally playing out. You're under the golden pocket resistance. Once you lose this level, you got all these points of liquidity, but more than likely it's going to be coming to the breakout, which is right here at 13 whatever. And then if it loses the actual support of this bounce to the left, then here's your next golden area to long. And then after that, we going down. That's about $400 on ETH. After losing the $1,000 level, that's the next extension. And anyone who's shorting from here, riding that all the way down, is gonna be very happy. And if you look at the chart really, is it supposed to not happen? Look at this. Look at this 1-to-1 extension right here, right? Why can't that happen right here? Right to zero. Why can't that happen right here? How many times have we done it? Here's one. Here's two. Mind you, this is Ethereum futures on CME. Why can't we do that again and then again? I just don't understand why people think we can't go lower. Right now, this is good though. It's on the support. As long as you go sideways, you can reclaim this golden pocket and go for the next extension, because I was looking for this 2,351, the fib to the upside, but we got rejected here. So it's like, no one's saying that it has to go down. No one's saying it has to go up. What I'm saying is these are points of interest for you to take trades on. If you're not in a trade, like this area is a good long and short, but you got to manage your risk with the stop loss properly. And that's how you need to understand trading. And yes, you're going to take losses, but as long as you trade properly, the risk and reward ratio should be in your favor when you're trading. And you should be eventually having more gains than losses, because losses are to be expected. No one and their mom could have told you that it was going to dump like that, other than the guy who was like, let me take advantage of the market and dump. Like, whoever sold it like that, you have to understand, they sold the order books out. So they were literally selling at a loss as they were selling. And hopefully it was organized like sell-off with multiple exchanges. Otherwise, they would have ate up the entire order book on one exchange. Like back in the day, you would see freaking $10,000 drop because there's no liquidity in the exchange or the order books on the weekend to even support the, like, there is no dip buyers. There's no ability to have the dip buyers. Nowadays, you don't get those crazy liquidation moves. You get like, yeah, you get like 5, 10% or 15%, but there was days, I mean, any veteran crypto trader will tell you the market is nowhere near as volatile as it was back in the day. But it's volatile, but nowhere near the shenanigans that BitMEX and Binance and all those exchanges played in the first times of trading, like insane wicks. But yeah, that's what we're looking at. I just wanted you guys to get a general gist of what my mentality is. The long was here, the short is there. Like, this was the long area, it's over. This is where you're supposed to take a short. A lot of y'all did not listen to my previous videos, obviously, and now this is a good area to take. So if you did not get into any trade, the way you would look at this is we're at support, okay? Taking a long is legit, and have your stop loss right under the naked point of control. If you're taking a long on CME, your stop loss should be right under the naked point of control, because if it goes lower than that naked point of control, that means you're hunting more money. So you can just get your stop loss. Yeah, you took a little bit of a loss. Then it's coming over here, you took a long, and now when it goes to do a dead cat bounce into the 21, you already made 100% gain on leverage. Because you got a long over here with a stop loss under here. It never is ever going to go lower than here. It just stopped here and then just went up to the moon. So there shouldn't be like a panic thing about, oh, this looks like it's going to jump further, I don't want to take a long. Well, if you don't think it's going to take a long, that's great. But the reason why I'm saying that it's an idea is because we're above the 21. The 21 EMA is above the 55. Yeah, price action is under it, but it'll need to close and open under it for it to look bearish. As long as this 21 EMA is above the 55, this is just volatile price action nonsense. Doesn't really matter to me. This was a buying opportunity on the dip in my book, okay? But this is $16.99 on Ethereum, and then right now Ethereum's at 16.22 or 16.25. So obviously CME open is going to be very interesting, and if I'm saying I would buy the dip on that, looking at the chart, then I mean, why wouldn't we consider a long on perpetuals? Yeah, spot, whatever you want to say. So yeah, having a long with the stop loss right under this naked point of control makes sense to me. It just makes logical sense to try to scalp the long. Try to take the short just makes sense to me with a stop loss right above the 200. It's like I could have two bad trades and, you know, have them both profitable. One doesn't need to be a 100x trade, guys. It could be like a 3x trade. There's no real way you're going to get liquidated on a 3x trade. And then all you got to do is manage your risk by having a stop loss so you know exactly how much you're willing to lose. That's literally all you got to do and move forward. And if you do it like that, one of your trades, yeah, got stopped at a loss, but your other trade should be in enough profit to cover the loss and more. And now you're on the winning trade and the winning side. You can leverage up that winning trade as we're breaking out to the next level. Why do you need to take the risk in this consolidation zone? As soon as we break this high and go up and then wait for the retrace, that's when you get to go, oh, let me add to my position, and then wait for it to go up and up and up and up. There's no point in fighting this uptrend. I'm not saying we're not like in a relief rally mode. What I'm saying is this was the retrace we were looking for. But the thing is, the panic and fear in the market can make this go lower. So we can start laddering along with a short, and then as it goes down, we can close out our short in profit and add to our long in leverage, and then we could stop out if we keep going down. And then we can look for another short right after we break this support, because if we lose this level here, we're definitely going to tank harder. Much harder. Like I told you, like $400, $500 is what people are like looking at right now. So you will have another shorting opportunity as well. So don't fear about taking profits. The main point about this is preserving capital. Without you having the liquidity in your account to trade, you're useless to yourself. You got to make sure you have some money to be able to leverage up, down, left, right, whatever. All right, guys, today was a long video. I'm sorry. Be safe. Have a great weekend. Get ready for CME Open. I'll probably be live on members just to watch those crazy candles for a little bit with you guys. Please don't forget to like, subscribe, and press the bell button for notifications. It really means a lot to me. I am now going hardcore with my YouTube channel and gonna be bringing a lot of things very soon as transfers hit accounts. And then aside from that, if you have any questions, concerns, or other assets you want me to take a look at, leave it in the section below and I will get back to you ASAP, I promise you. You guys mean the world to me. Thank you so much. All of you guys who are supporting my YouTube channel with the membership, I freaking love you guys. You guys are going to be the driving force as to where this channel goes, because I want to make sure that you guys are getting the value you're paying for. So we want to basically cater it to people who are in need of trying to learn as well as earn. because not only are we here to teach, the trading is a zero-sum game. We're here to trade and make money too. And if everyone wants to, like, so eventually I will do a copy trading account on Bybit, and I believe you're only allowed to have 200 people follow your trade. Obviously, members are going to get priority on the copy trading platform. Wherever I go, members are getting the first slots, and then we'll go accordingly from there. But that is the new thing I will be doing within this month, is setting up copy trading. I will have a swing account, a scalp account, so that way we can do the low leverage trades, high leverage scalps in 15 minutes. I'm going to be showing you how to have both trades, high leverage. I just don't know what about P&L wise. I don't know if you guys need to see the numbers or the percentage. And then losses wise, I want you guys to see that for sure. So it's like, I want you guys to understand I take losses too. It's not about taking the loss, it's about managing the risk. That's the name of the game. So I will see you guys soon. I hope you guys are excited because I'm lit. See you soon. Have a great weekend, and I will see you later today, guys, in the Discord to watch some live trading. Adios.